Good morning and welcome to the VSA Morning Miner. I'm Ollie O'Donnell and I'm joined by Paul Rankin. Paul, how you doing?
I'm well, thank you, but not a nice day outside today.
No, it was a pretty wet and miserable cycle, although it's not cold yet, so that made it bearable. Let's jump straight in. Let's start with some good results. Afritin mining.
Yes, we had Afritin's interim results released today. Afritin being the AIM-quoted tin miner in Namibia. Revenue of 5 million sterling reported for the period, for an increase of 468% year on year, and the gross margin came in at 22% over the period. Cash and cash equivalents at 6.3 million sterling, and they are debt-free now as a result of paying off the remaining portion of the convertible loan notes. They managed about 368 tons of tin concentrates of production for the 6 months, of which that contains about 227 tons of metallic tin. And they've also begun some tantalum shipments as well, and also have the board approved in recent days the expansion of the phase one plant in order to increase the production rate even further, which should be that expansion completed by the second quarter of next year. And so all looking very positive there at this point.
Yeah, especially as tin prices have strengthened recently, and the African price is actually still trading some way below its peak earlier in the year, despite the fact that tin prices are now close to record highs again, and so that would indicate the earnings outlook for the second half should be stronger.
Yes, as long as there's no interruptions, I would think that it would be moving right along.
Yeah. Right. Other end of the scale, Bushveld mining. Not quite.
Yes, Bushveld also with interims out, essentially a firm up in their numbers that had been releasing here. This for the period showing revenue of $47 million US, which is a 9% improvement year on year. And that on the back of better prices received here of about $5 a kilogram for vanadium pentoxide, up to $29.24. But their sales volumes were a little bit lower here at just 1,600 tons metric ton equivalent, where group production showing about a 5% decrease overall. The operational performance at Metco wasn't good enough in order to offset what was a little bit disappointing Q1 is the reason. 31.6 million US in cash, and their net debt stands right now at 54 million US dollars. So relatively mixed bag there, but their lost time injury frequency, in other words, the safety rating for their operations, very nice improvement year on year. So nice to see.
Yes, although, I mean, generally, I think those are pretty poor results, and second half is only going to get tougher as vanadium prices have eased back somewhat over the last 2 months. And I think a lot of the cost increases that the company have blamed on FX is a bit unfair, as this time last year the rand was at an abnormally weak low, so actually they were benefiting disproportionately from that, and really they should be in a position to operate comfortably at this level. And the other thing is 14 million of SG&A is extremely high. It's about 30% of revenue. I'd expect a producing company like this to be somewhere close to 10% at the top end. What else have we got, Paul? Sarabi Gold.
Yeah, we got Sarabi Gold. That's the AIM-quoted Brazil gold miner. They put out their full year numbers here, and it appears to be a relatively mixed bag here. And let me pull that up, those details up here a second.
Revenue is off a little bit.
Revenue off about 8% to $56 million US, even as the gold price rose for them about $300 an ounce. On the back of that was a about 20% fall in their gold production for the year to just over 31,000 ounces. As a result, then their costs kind of blew out here as well, with all-in sustaining costs up by 30% to $1,374 an ounce. The profits, however, were because they were able to concentrate during that year on production stoping as opposed to just development, or the focus was on that. Their profit margin actually doubled to 7 million on a year-on-year basis, but they did draw down on cash by over 50%, such that they stood at 31 December at just 6.6 million. So we would hope to see I would say a better performance at the operating level from them, even as they have this next mine of theirs that they've begun construction on as well.
Yeah, no, that really is a mixed bag. Anything else out there, Paul?
Just to say that in the past week, we saw another $6 increase in the spot price on uranium. Uranium now at $50 a pound.
Yeah, well, I think there's been a bit of a pickup in media attention as well on nuclear, with the energy and fuel crisis that's going on here. Nuclear is probably the easiest to roll out of any of the green energies. And so I think Europe might start to look a bit more closely at increasing its reactor power. Whether that comes through to fruition, probably too early to say, but certainly going to be it's going to be part of the conversation a lot more frequently, given the current events.
Yes, and nuclear being a long-term strategy, and I think for my standpoint, I'm not that bullish on the nuclear power sector until we see some significant change in the perception or the actual policy on the time it takes to do the permitting, which is about 5 times longer than a similar size renewables project. So until that changes significantly on a global basis, I think it'll always struggle, I think, to get as much action as it otherwise deserves.
Yeah, that's true. Great. Okay, Paul, thanks for your insights. We'll speak to you again soon.
All right. See you then.